let's have a look at the market update. November was an absolute humdinger for real estate brilliance gross commissions. Amazing. But let's have a look at the market snapshot across Australia. So Sydney, 9% growth for November, 4.3% growth for the quarter, 25% annually. So huge increase last 12 months. That gives you the calendar that, November to November, 25%. Melbourne, 0.6, slightly behind, 2.4 for the quarter, 16.3% for the year. Obviously, poor Melbourne has had their challenges and they still had 16% growth for the year. So not doing too badly, good old Melbourne. Brizzy, 2.9, quarter 7.4. And they've had an annual growth of 25.1. We'll talk about Brizzy in a moment. Everybody's leaving Melbourne and they're going to Brisbane. Okay, that's what's happening at the moment. They've said Perth's too hard to get into, so we're going to Brizzy. Yeah, let's go to the Gold Coast. Let's just holiday for the rest of our lives. We'll talk about that in a second. Adelaide, 2.5, 6.5 for the quarter, 21.4 annually. So Adelaide is finally getting the respect it deserves with property growths. And combined cap, okay, Perth, little old Perth, 0.2% growth. 0.2% growth. It's okay. 0.4% for the quarter. We're still in growth territory. And 14.5 for the year. So little old Perth still, but I think we've also got some further growth to happen in the new year. So watch this space for the Perthians. Combined capital cities, 1.1% growth. So we'll talk about how it's slowing, 4% for the quarter and 21.3% for the year across the board. So that's the number you're quoting for, obviously, if you're in the capitals. Combined capital cities, 21.3. Combined regional, 2.2, moving stronger than capital cities is regional. 2.2 for the month, 5.9 for the quarter. And regional has had a 25.2% growth for the 12 months. And of course, nationally, that's the real number, but doesn't really appeal to everybody's sort of spot. But if you want to quote nationally, 1.3% for the month, so still steady growth, 4.4 for the quarter, and 22.2 annually. So let's break that down, folks. Let's break that down. So housing values continue to rise in November, but conditions are diversifying as stock levels rise and affordability pressures mount. Okay, Australian housing markets were 1.3 higher in November, as we've already looked at, making it the 14th consecutive month where CoreLogic National Home Value Index recorded positive value growth. The November uptakes national housing values 22.2 higher over the past 12 months, adding approximately $126,700 to the median value of an Australian home. So write that one down, folks. If you want looking to feed the greed of our sellers, because let's be honest, a lot of our sellers are on the mortgage belt, and if they see that they've got 126 grand added or increased in their equity, now it doesn't mean that everybody's got that, but on the median house price, that's what they're saying. $126,000 for the median house price for Australia. That's what they've made in the last 12 months. Out goes crypto, in goes real estate. Yeah? Not a bad return. Although values are continuing to rise, the November results was the softest outcome since January. So obviously we're slowing, okay? The slowdown in pace of growth is due to a number of reasons. The obvious ones we mention all the time: fixed mortgage rates are rising, higher listings are taking urgency away from buyers, affordability has become a more sustainable barrier to entry, and credit is less available. That's it. The capital city trends are showing greater diversity. Brisbane, Adelaide are recording fast-paced growth. Now, like I said, through the COVID, the lockdowns, everyone's just gone, especially Melbourne. People are moving to Brizzy, and obviously cities where the lifestyle is a lot easier, better, and it's not so condensed. So, you know, speaking to our Melbourne clients, Daniel being one of them who's on the phone, he just says like a lot of the people that he's selling are moving to Brisbane. So that's very interesting because we haven't seen that in such a huge form. Means that there's a lot of movement happening, which is great for real estate agents. So, okay, so Sydney and Melbourne have slowed more sharply, and of course Perth. So it is what it is. Positive rate of interstate migration because they're all moving out of those places, but Perth not so much moving out of them. Just we're having slower growth. Positive real estate. Positive rate of interstate migration is fueling housing demand, as mentioned. On the other hand, Sydney and Melbourne have seen demand more heavily impacted from affordability pressures and negative migration from both an interstate and overseas perspective. We know that there's that immigration is down 65%. Okay, so we have got literally a dam wall. Okay, that is chock-a-block with water. And as soon as these borders open, we're going to get an absolute flood of migrants, also foreign students. The only problem is most of them will come here and rent for starters. So the rental property market is under huge threat in the next couple of years, and that will filter through to sales. So I think we're going to have a softer landing with this slow than we probably have ever seen, even probably to the point where it's probably going to keep kind of, you know, keep on going to a point like it is now, where it's not quite, but it's not coming down. It's kind of, which is, imagine having the sales that you're having now and, you know, and the prices, because that means our commissions are higher. It's a pretty damn good time to be a real estate agent. Who's got a job for me? No one?
You can do enough for me.
Thanks, mate. I just had a one-on-one with Matt, and I said to him, what did I say to you, Matt? Matt says, no, I'm not very keen. I'm giving him a hard time about door knocking because he's just primed to be like a gun. And I said to him, what did I say to you?
When you retire, you're going to door knock for people and get the listings.
When I retire, I would be doing it now, except Nita says, you're not freaking door knocking. I'm going to retire. I'm going to door knock for people and just flick them leads for 20%. And he said, I'll pay you to door knock. So that's on the table when I'm about 60 plus.
So not long.
Which is not oh, you beat me to it. I was going to actually self-criticize, but thank you for that.
Pleasure.
No one else can get away with it but you, Tracy.
Friendly reminder.
Yeah. Hey, I welcome age. I'm getting better with age. Maybe not here, but in here and in here. So that's good. Okay, so houses have continued to outperform units. However, the quarterly rate of growth is now the narrowest it's been since October last year. So the gap is getting smaller. I know these guys are starting to have smiles on their faces. These guys are one of the only places in Perth that have got stock. So if your clients are looking for apartments, go see these guys. Tell them I referred you because they've got stock you can move straight in. No, there's nowhere else in Perth that have got brand new luxury apartments that are available right now. Everything else is off plan. And so that's pretty cool. Just a side note there. However, the quarterly rate of growth is now the narrowest. I've mentioned that 1.6 points between the two. Okay. Based on median values, capital cities houses are now 37.9% more expensive than capital city units. Doesn't mean too much to us. The slowdown in housing market conditions is less obvious across the regional areas of Australia, where the monthly pace capital gains has accelerated over the past 3 months. So that's interesting. Regions of Australia up 2.2 in November, double the monthly rate recorded across capital cities. So Tasmania, 2.5 for the month and 29% for the year. So if you want to buy an investment property, we're probably a little bit too late, but Tassie's going nuts. But once again, they're coming off a low base. And of course, New South Wales, regional New South Wales, 2.5 for the month and 29.1. So there's some regional places that are just going ballistic. Okay. So I thought I'd mention that if you are regional, or if you're looking to buy regional, or your clients are looking to buy regional, that's okay. No, that's okay. All good. We're all friends here. You'll just have to make everyone coffee in a minute, but it's
Okay.
only joking. Okay, a rise in number of homes available for sale is a key driving factor in the slowdown in capital growth. All right, so I'll read that again. A rise in the number of homes available for sale is a key factor driving the slowdown in capital growth. Nationally, the number of new listings added to the market over the 4 weeks ended 27th of the 8th, tracking 15% above the 5-year average, the highest level since 2005. So stock levels are increasing. Fresh listings are being added to the market faster than that can be absorbed. Remember, 6 months ago, it was completely the opposite. Okay, everything that came to market was being absorbed. Now, properties are coming to the market quicker than can be absorbed. Quite a significant change. Now, that you can report when you're pricing and deciding on strategies to choose. Okay, very, very important. Although inventory levels are rising, the upward trend is from an extremely low base. We mentioned that the total number of active listings has increased by 67.3% since early September. So significant. But stock levels remain negative 24% below the 5-year average for this time of year. We expect inventory levels will continue to normalize in 2022, which should see selling dynamics gradually, the operative word, gradually shift away from vendors, providing buyers with some additional leverage at the negotiation table. Get that? Good stuff, huh? However, it will be important to see if this trend towards higher listing continues after the festive season. I got a feeling it's probably going to go the other way. We're probably going to have, as the new year hits, we're going to have another soak up of stock. And I think coming into winter, we're going to be low in stock in Western Australia anyway. And depending on what happens in February, which I think I've had a whisper, me and Mark have a coffee at the local coffee shop, every couple of times a week. And he said uncategorically, but it's just a whisper, that the borders are opening in February. But you didn't hear it here. And it's not being recorded. I'm only joking. The guy downstairs knows Mark, and Mark says it's opening in February regardless. So that's pretty cool. Didn't hear that from me though. Based on medium values, capital cities houses are now 37% more expensive. We went to that. All right. Yeah, so next page. Okay, let's have a look at trend in rental growth. So rental growth has increased in every state and territory. So obviously some more than others. Every capital city, rest of state region recorded a rise in dwelling rents over the month. Although rents are rising, gross rental yields have continued to reduce as housing values rise faster than rents, of course. Okay, the outlook for the Australian housing market, just to sort of condense what we've just gone through. However, the pace of capital gain, the outlook of Australian housing market remains positive. However, the pace of capital gains has lost momentum across most regions since April. This trend towards slow growth is likely to continue into next year and beyond. Most of the factors that have been pushed housing prices higher have either diminished or expired. Advertising inventory remains low, but is now rising. Fixed-term mortgages rates are rising. Housing affordability is becoming more challenging. Tighter credit policies also could slow housing. Although the housing headwinds are building, a variety of tailwinds should continue to support the upward trajectory of home values in the short term. Although mortgage rates are rising, cost of debt is likely to remain well below long-term averages. As more Australians are vaccinated, disruptions from COVID should become less frequent. This is a big thing as well. So please be aware of that when you're communicating with your clients. Okay, obviously the vaccination rates will help the market as far as the disruptions are concerned. Melbourne is a perfect example of that. In and out of lockdown, I think they were in lockdown total for about 365 days or something nuts. So with this, 80%, 90% vaccinated, that's going to definitely help. Okay, not swinging you either way, but as far as a real estate agent is concerned, that will definitely help our mission to make sure that the disruption is less through COVID. And we still haven't, here in Perth and Australia for that, well, I suppose Sydney and Melbourne are rising in numbers, but we've just been so blessed. I'm, quite nervous, but it will come here. I think we've got to realize that it's coming, and we're just going to have to deal with it and take what all the other states and territories and countries have learned and adopt those. But I think life must go on now. Life must go on. I think we can all agree that life must go on, and we've got to now face that wave and deal with it as best we possibly can. But it can disrupt our little bubble that we've had, the comfort zone. So we just got to be aware of that. Migration will be seen in rental demand, while uplift of purchasing a home from permanent migrants is likely. I mentioned that already. So just on Perth, 1,000 transactions last week, which is pretty stable. 9,200 properties for sale in Perth. That's not regional included. That's just Perth, just for most of our members are from Perth. And rental properties, 2,360, which is down. Listings are up by 2%, by the way, just to say that. 2,360 properties for rent in Perth, and that's down 18% lower than this time last year. That's the market.